Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today, we're going to talk about my short attack experience. And what I'd like to do over the next week or two is go through several case studies of where I was either an attacker or a defender in a short attack to give management teams an idea of what the scenario looks like, how to defend, and how to resolve the situation, but then ultimately provide some high-level thoughts on how you defend yourself when you find yourself in one of these situations. So when I was a sell-side analyst, I was involved in 6 short attacks. There were 4 instances where I was able to initiate a structurally focused short attack against a company that resulted in a greater than 50% decline in share price. In each situation, the management team or company had to either change management or change strategy to put the company on a new pathway in order to survive long term. There were 2 instances where I successfully defended short attacks that were both narrative in nature. The Chihu 361 specifically gets a lot of credit because that management team did a great job of responding and debunking a lot of the myths or falsehoods that were part of that narrative-driven short attack. Now, when I was in corporate, I've been involved with 3 different short attacks. I've successfully defended in data center REITs at DFT data centers, where we were hit with attacks based on our leasing performance in given quarters. Another was at Caesars Entertainment, where we were hit with leisure trends in Las Vegas, where we were able to defend against that with better control and communication around consensus. Now, the one time that I was not able to successfully defend was at Athenex, a biotech, where they were hit by a strong short attack from Viceroy Research. And the key in this instance is that short attack was based on a fundamental, irrefutable premise, and that the clinical trials for the drug in question were conducted in Latin America. And by association, that short attacker felt that they could not show efficacy of the drug to the FDA's liking, which turned out to be true. And so in summary, you have to remember, change is the only successful defense to a structural short attack. The company needs to either change management, change strategy, or change something else in order to change and debunk that irrefutable premise of the structural short attack. Thanks for watching. Always here to help you with your capital markets, investor relations, and corporate finance needs.